Right, we are now live on Facebook.
Hi.
Hello everybody. Terribly sorry for the delay. I'm afraid that, some people were late getting here. Now, we had a few technical issues. So today I'm so excited that we have got the wonderful Kate Faulkner joining us. And firstly, you probably don't know who I am either. So I'm just going to say that I am the lady behind the social media. I work with Maxine very closely, and I'm delighted at how wonderfully she is doing on these videos. So great to see you guys, or for you, hopefully great for you to see me, maybe not. But I won't be here for too long. So I want to introduce Kate. For those of you who have been to Maxine's landlord seminars before, you will have met Kate. And for those that watch the BBC, you've probably seen her on there talking about all things property. So Kate is our guru in the industry, and today she's going to talk about mainly what is the predictions for the property market after, obviously, the COVID crisis. But I guess we'll touch a little bit on the fact that 2 days ago we got the sudden announcement that estate agents were now open in the UK. So that's all been her scrambling around, and Max is also going to talk about what Maxine Lester are doing in that regard. I'm sure that most of you know Maxine because you're on her landlord group. If you are her landlords, then you are absolutely in the most capable hands possible. Maxine's business is award-winning every single year, but there's a good reason for that, and it's because she does an amazing job. And believe me, and I'm sure Kate will agree, I work with lots of agents all over the UK, and I'm sure that Kate does too. So you really are in safe hands if you are under the umbrella of Maxine Lester Lettings and Property Management. So well done, Max. And I'm going to sneak out now and have any questions ready so that after Kate and Max have spoken, we can come back with some questions. So if you've got any, get those in and I will collate those on the Facebook, and I'll see you later.
Thanks, Jane. So thank you so much, Kate, for joining us. First of all, I'm really honoured that you've been able to spend some time, because I know that you've been getting involved with this guidance, all 5,000 words and 17 pages of it. So thank you so much for that. Jane said I'll be doing a bit of update, but really today it's all about Kate. We wanted to find out, we want the information with regard to what's going to happen after lockdown, and that was Wednesday. So Kate, it's really over to you.
Thank you very much. Right, hello everybody. I hope you are all well. I've now got to find, oh, there we go, there's a presentation, so that's a good start, isn't it? Apart from the fact that I've got to the end, so let me get you to the beginning. I always find that is a very good place to start. There is a big question mark, because we've no real idea quite how things are going to pan out. But I think we can give you some hints, tips and some ideas to help you through what is going to be quite a tricky kind of few months. So I'm going to talk to you obviously about property, because otherwise it would be a bit pointless. But the two biggest influences really are what's going to happen politically, and most importantly, of course, how the economics are going to go over the next few months and few years. So I thought, though, first thing I always do is I think, when I'm doing a presentation, I think I must just go and check what I said last time, in case I said something really stupid that wasn't true. However, handily, and I promise you, and Maxine is my proof of this, this is the presentation slide that I did last year. And the biggest piece of advice is that, and I basically said, and don't forget, we're all terrified about the impact of Brexit at the time. And I said to you that the market is uncertain, but it always will be. And over a 15, 20-year period, we're going to get some upsides and we're going to get some downsides. And what I said at the time was, critical to your success is investing for that long term, particularly in buy-to-let and as a landlord. And nothing has changed on that. Build capital growth in at the start. The reason being, you're not going to get as much natural growth as you thought. Well, couldn't have been more right on that one. And really get to understand your sold property price data, because average prices, and I'm going to use some average data today, but I'm also going to use some individual pricing to show you that actually they're pretty pointless from an investor's perspective. Keeping up with the legals, super critical. even more. Mentioned, Maxine, that we'd done over 5,000 words. Well, there were over 21 pages of new government guidance when COVID came in for landlords and tenants. 21 pages. If you did not have time to read them, thank goodness you were being looked after by Maxine, or you could have made some terrible mistakes. And it's all about understanding and mitigating risk. So despite the fact we have kind of like a 1 in 100 year event, my views on this really is that nothing has changed, and the principles that we set out to you last year and in previous seminars are exactly the same. But we do have a new uncertainty, and something that certainly I've never come across before, thank goodness. So the first thing we have a little look at is how's COVID-19 going to impact on the economy? So you might think, well, that's a strange thing to put up. A great big love heart, but I heard this on Newsnight, and it was hilarious watching the presenter's reaction, because this eminent economist turned around and said, well, what happens to the economy is all about love. And I remember thinking, hang on, what are they talking about? But basically when they say that is that when we go into recession, there are 3 types of recessions. Literally everything falls off a cliff and you stay down, and that's pretty much, if you like, what's happened to Japan. They've never kind of really recovered from past recessions. The U is where you go down, stay down for a little while, and then things come back up again. That's the most popular, for want of a better word, recession. Definitely for those of you around 2007, the one that we went through. And then there is a V, whereby you literally go, economy goes down, but it goes down for a specific reason. That specific reason is solved, and therefore you go straight back up again. So this is it's not a forecast, and I'll just be very clear about that. This is from the Bank of England, and what they are saying in this chart is they've basically charted recessions, and you can see those kind of U-shapes, some a little bit V, and they're basically saying that it's not a forecast, but if we have a 3-month lockdown, then this is what we think will happen. And that's where you can see at the end, you can very much see this, we will go down. But unlike, as though we have a big hit in the next 6 to 12 months, they're expecting everything to come back up again, because once we've solved the problem of COVID, there's no reason as yet as to why the economy can't go back to normal. Now, bear in mind that we should already do better than this, because we're only into a 2-month if I've measured it correctly, but who knows what day of the week it is at this moment, quite frankly. So what's more useful actually than seeing that is this chart. And I know there's a ton of numbers on here. Don't worry about that so much. On the left, basically GDP is how well the economy is doing. So the higher that number, the better; the lower that number, bad news. And you've got things like inflation, employment, average earnings, etc. So if you take a look at 2020, we are expected to tank this year. And normally in a U recession, that would be a problem, because that's a huge tank, bigger one than we've ever had before. If that stuck around for the kind of 5 years that we saw from 2007, that would be an issue. But you'll see in 2021, they're expecting, once COVID and we have a vaccine, which is likely to come sooner rather than later, that the economy will recover, not just here, but worldwide, and that things will go pretty much, as you can see, for 22 onwards, back to normal. So there is, whether it's a hope that we have a V recession, or whether it is reality, if you like, they are 2 different things. But the more optimistic we are, actually, and economists are and reporters are, the less likely it is to have from a confidence perspective, a long-term recession. Also, just to point out, a lot of people say because we're borrowing so much, that's going to cause hyperinflation. That is not expected. One of the reasons for that is that it's not just our country that's borrowing more money. The whole world and the need for money and borrowing levels are going to go up. So those that are saying hyperinflation is on its way, it's unlikely from this perspective. So the big thing you want to know, and we'd all love to know, and I'd be very rich if I really did know, is how this is going to impact, this recession is going to impact on property. And the honest answer is we don't know. And the real honest answer is we don't know yet, because we haven't come out of lockdown. It's going to take a couple of months to have a much, much better idea of whether those numbers, if you like, the Bank of England and others have come up with are correct. But this is genuinely the honest answer, and I don't want to fool you into thinking that I've got all the answers, and neither has anybody else. Even the Bank of England said we can't really forecast what's going to happen because we haven't got enough numbers. So I'm certainly not going to usurp their geniuses. But there are some things we know. And one of the things that I've focused on over the last sort of 15 years really is how politics affects property and how the economy affects property. The other thing I've been looking at, which is really interesting, is how does our market today in property compare versus 2007? And there's some fascinating figures, which may mean we're not in quite such a big drop. We had about a 20% drop in prices last time in the last recession, and that might not happen. I'll explain why. And the other thing I would always say is it doesn't matter what's happening nationally, what's happening regionally. It's all about a property on a street. And if two people are competing for one property, prices, where they would have normally gone up, they'll probably stay the same. But if two sellers are competing for one buyer, that's when you get price falls. So that basically, that's never changed over the decades that I've been doing this. And the other thing is we're not selling cars. We're not selling clothes. So the difference for the world that we live in property is the same number of people are going to need a roof over their head today as they did 8 weeks ago. And in actual fact, over the next year or 2 years, because your local population is growing, you're actually going to need more homes than the current number that we have currently. So that's where property should definitely do better than other areas. So I mentioned to you then that the property market today is not the same as 2007. Now, we might learn from this third recession where we've got data to track that it doesn't matter what happens before the recession. If you go into a recession, you still get potentially 15 to 20% house price falls. So that might still happen. However, there's a good possibility that might not, and I'll explain why. So in 2007, for those of you who remember this, there was some, I can only describe them as numpties, to be honest, lending 120% on properties. Why would anybody do that? But they did. So you can imagine when prices tanked, that caused a massive issue. Mortgage rates, do you remember paying 6 or 7%? For those of you who are new to the market, you'll laugh your socks off that we were paying those kind of levels of interest rates, but that's what they were. And most people are on a kind of 2-year fix. We had this huge subprime crisis, and this is where the U recession was more likely than a V, because that really tanked the economy for a long time. And it caused the property market to crash because there was no money to lend. Literally, there was just nothing there because they'd over-egged it with their daft 120% lending. And if you remember, I'm in Nottingham, and people are selling 1 2-bed flats for twice the price of a 2-bed terrace down the road. Well, that was just stupid. And there were a massive amount of city centre flats overpricing from the Midlands upwards and out to Wales and Northern Ireland. And it affected the whole economy. So when you get a normal recession, what happens is everybody suffers. So everybody's income, be your commercial or a business or personal, we all had less money in 2007 recession than we did before. So let's compare that today. Now, we haven't got stupid lending rates 120%. In fact, we've got better lending and more restricted lending because anybody who's had a mortgage since 2014 has been assessed at being able to afford 6 or 7% while paying 2 to 3% interest rates. So very, very different. And most people have locked in those massively, well, those really low rates for 5 years. So nobody's going to get a huge shock in terms of, even if rates went up tomorrow by 6 or 7%, and I'm not suggesting they will, by the way, so don't panic. But most people are on this 5-year fix. And then we move into the kind of lending liquidity side. We've got the mortgage companies have got plenty of money, and they kind of have to lend to stay in business. They're just somewhat cautious at the moment. So as we go into this market, we don't think the 90-95%, we're not sure whether 90-95% lending will come back. At the moment, the top tends to be about 85%. I think HSBC have got some 90%, but we're working with the government to see what we can do to help lenders be a little bit more generous. And bar London, there's been very little overpricing, certainly in your neck of the woods, and probably Cambridge maybe a little bit, but not in your areas like Huntingdon and St Ives. And this only affects part of the economy. And I'm going to be fascinated to see how this impacts on property prices. So imagine a road, if you like, where only one or two, perhaps 100 properties on there, only one or two come up for sale, but the majority of people who buy are GPs and consultants. Well, they probably still want to buy there, and they might be quite happy to pay whatever the price was before COVID. Move to another area, for example, a docks area, so Southampton, I had a little look at, where you've got all of the big cruise liners going in, ports aren't working, for example, and maybe the prices around there aren't going to do so well. Or an area like the seaside towns is another good example where they're reliant on catering and leisure, which of course we're only just being allowed out to do. So golfers and tennis players, good news for you. But don't forget your hand sanitizer. So really, we don't know how that's going to affect property prices, whether they'll come down still everywhere like they have in past recessions, or whether that will mean some properties on some roads will actually be lucky enough to kind of maintain their value. And this is critical, I think, in that when we went into the 2007 recession, this is, so in 2007, January 2007, UK property prices were running at 10.5%, which is high. So the normal rate would be about 6 or 7%. East of England doing well. Look at Cambridge, vast 20% year-on-year growth before everything crashed. And Huntingdon up at 6%. Now look at where we were. Much less growth, and in fact on average we've even seen some falls. So we're not going into this recession for the first time I can remember with hyped property price inflation, which could mean it could pull it down, that 20% that we saw in the last recession and the one in the 1990s. So that might restrict the falls. Might be completely wrong, but I can only tell you what I know from the evidence that I have. Now, I'm really sorry that I couldn't get you better data. We have better information on England, and I couldn't get it broken down to your area. But the reason this is important is that everybody's worried about house prices crashing. Now, from 2000, and what I know is that from when you look at England data from 2007 to 2000 and today to 2019, of the people that own a property, which is about 50-60% now, more people own outright than they do with a mortgage. Okay, so those numbers that you see in Cambridge, for example, you're only talking about the people affected by house price falls if they have to are forced to sell. You're only talking from 2011, and I think this will have actually fallen since then because people are paying off their mortgages. You're talking about 22% of the market being affected. People in social are fine, and in actual fact slightly better off. People in private rented, well, they can trade up and down depending on their personal circumstances, head back to mums, etc. And for those who own outright, well, as long as if they're forced to sell, they're not going to have that because they have a mortgage to pay. So we are talking about a tiny part of the market that might be forced to sell. And as a result of that because repossessions are such a huge impact on house price falls, I just can't see how the pressure that house price falls were under back in the last recession, the previous one, are going to suffer as much. So if you take 1990s, I think the number of repossessions in the worst year were about 90,000 homes. 90,000 homes. The number of repossessions in the worst year during the last financial crisis were 45,000 homes. Now, even in a good year, sort of 2000, good years 2000 to 2005, 25,000 homes were repossessed and prices were still going up. And I'll talk to you a little bit more about this in terms of when we come on to politics, but that's important because if repossessions aren't going to make it to the market, it's also not going to put the pressure that we've seen before on prices coming down. Something else might hit us, but overall, I just can't see the price pressures coming through that we've seen in the past. And this is where it comes to politically. So have things changed that much? And the question is, are they still anti-buy-to-let? And I do use that phraseology with the government because I do think they have been unfair on landlords. And the answer is yes. But interestingly, for those of you that are in the commercial market, there's been a lot less pressure for tenants to pay the rent to landlords than there has in the residential market. Government, particularly in England, has made it very, very clear tenants are to pay their rent, and that's what they should be doing. And to help them pay their rent, they have made money available to do that. Scotland, interestingly, usually the harshest on landlords, has gone a step further and said that tenants can get a loan from the government to help them pay their rent. And now there's huge amounts of pressure for England, obviously Wales and Northern Ireland, to do exactly the same. The next thing is the 3-month evictions. Well, we were already losing Section 21, so I wouldn't be surprised, and I would bet a little bit of money maybe on the 3-month evictions being here to stay. So bear that in mind. And the other thing to do again, and this comes back to the fact that you haven't got, it's not cars that you sell, it's not clothes. But say, for example, the demand for the rental sector in the private sector reduces, that's probably going to happen because of unemployment. So there's going to be more people on local housing allowance and universal credit, and they still need a roof over their head. And although local housing allowance and universal credit wasn't a great bet last year because it was underpaid versus the averages, that has been moved up. They've all been given £1,000 increase this year. And the result of that means that actually the LHA tenant may be more attractive than they've been in the past. The second big push by the government as far as property is concerned was wanting to drive up home ownership. Yes, they will still want to do that, but it's not going to be easy in a recession. And these are the actual figures that came from the English Housing Survey. And it shows you that actually recessions are good news typically for private landlords, because your market went from 13% to 20%. That wasn't because you're greedy. That wasn't because Maxine is evil. It's because of people's behaviour. Why would I buy in an uncertain market? Surely I would just carry on renting if I wanted, or even sell up in the hope of prices falling and rent, which some people will do. And the big thing, and this goes back to that repossession discussion that I had a little earlier, the government are going to absolutely have to focus on keeping people in their homes if they have a mortgage, and even if they can't pay it. And the reason being is homelessness has gone up by 165% since 2010, partly because of mistakes they've made on universal credit, and partly because they have forced buy-to-let landlords out of this market because it pays so badly compared to professional tenants. And from my view, if I'm sitting there as a government and I don't want that homelessness figure to rise, the cheapest place for me to keep people who are struggling to pay their mortgage is in their homes. We've already seen the 3-month mortgage break come through. Lenders cannot, just like you can't, lenders cannot evict homeowners for the 3 months, exactly the same as you. And I think they're probably going to be told to look after people for a lot longer. And of course, that's where my thought process in the number of repossessions is going to be a lot less this time, a lot less than that 45,000 that we had in the last recession. And again, that puts less pressure on house prices. But the reality is, whatever we talk about nationally, the only area it matters is the one that you're in. And it's really worth reminding you, if this is just a 2-year hit, basically every quarter, I think it is, the government comes out with and tells you how each region is performing. Yours is the east of England. You can see there, southeast and London are the kind of powerhouses, but actually east of England is a big powerhouse behind these economies. So the future is still looking very, very bright if we can just do this V recession and get back to, I don't think we'll ever get back to normal because I can't even remember what that was now. It feels so long ago. And the next thing to vote, don't worry that there's lots of numbers on here. I just wanted you to kind of give you this just to show you where the stats have come from. But you have, versus all of these other regions, the 3rd highest population. You have the 3rd biggest economy. You've got the 3rd highest salaries, and you've got the 3rd highest economic growth. That's not bad for an area outside the London and South East. You've got one of the lowest unemployment rates. You've got a great mix of jobs. And what I mean in that is that you've got a good mix between the manufacturing sector and the employment in the public sector. And public sector employment is likely to be very strong over the next couple of years. So that's a good thing. And of course, you have this amazing powerhouse of Cambridge University, which has lots of companies and science. And in the science world, they're worried about the next 50 years. They're not worried about the next couple of years. So their kind of economic dynamics and funding is very, very different to like a seaside town, if you like. So you're in a good economic area. If you then drill down further, and you'll kind of see where I'm going with this, Huntingdonshire is planning for a huge expansion, and this is all where they're looking to put the houses. Now, I love, as an investor, new homes building. And the reason I love it is because it brings people into the area, and guess what? They want to get better properties which are closer to the amenities, and that's typically the second homes that you will be owning and you will be renting now. And they can't build any more of those, so it can often, when you see lots of new build coming in, just as it did in Cambridge, where they built all of those new flats, I was looking and thinking, wow, those 2-bed terraces nearby that they can't build any more of are going to be really popular in the next 5 years. And sure enough, prices of those properties went through the roof. And for those of you who haven't studied this amazing development in Cambridge, Milton Keynes and Oxford, it is phenomenal. And this is over the next 20 or 30 years. So remember, you're not into this for the short term, you're into this for the long term. And you're talking about massive new infrastructure. Who hasn't been on the A14 recently? What a fabulous road. Who hasn't queued on the A14 and hated all of those roadworks? Oh yes. But as an investor, I hope you did what I do and say, I don't mind a few queues, because my word is the A14 getting a lot better. And what they're doing is unlocking this huge emphasis that they're going to have on being able to build loads more homes. All of those Londoners who hate living where they are now because they're terrified are going to want to be coming out, moving to those more rural areas, but still be able to get back to London. And this is what it's allowing to do. So your areas are hugely attractive to new populations. And I do think that success is reflected already in rents and prices, and will continue to be so. So, Maxine, you know these stats better than I do, but they are looking pretty good, I think. And I have to say, credit to Maxine. I don't know, and I work with huge numbers of agents, much like Jane. I don't know anybody that produces better stats than Maxine. So you are extraordinarily lucky to be able to have access to this information. Most agents would be terrified to give you this information, but you can see all of the different rents there, and you can see, Maxine, on the right where it says average percentages, is that the increase, or is that the average yield? I wasn't quite sure.
It's the average yield that we're looking at.
Wow. I mean, there they are in London sitting on their tiny 3%. And here you are in this enormous powerhouse running up figures of 7, 8 and 9%. I mean, that's just terrific in terms of returns, way above what you would see nationally, which I think nationally it's about 5%. So good returns on your rents. And this, I'll explain this chart a little bit to you, so you can see all the different towns, and you can see Cambridge at the end of that. So that purple bar, what that tells you is that if I take the average house price today away from the average house price in 2000 and look to see what the average increase has been through all the highs and the lows over the last 20 years, basically you would have achieved, if you bought the average property, about a 6-7% increase every single year in your property. And that's fantastic. Now, we know that fell when the green, which is what you see with the green bar. That was because of a huge increase in 1 year, probably about 30%, I think it was, for every single property in your area in 1 year between 2000 and 2005. That's what pushes that bar up. Since 2005, we know house price growth has fallen, but you look at your house price growth in the likes of Cambridge, you're looking at 4.5% there versus areas. So I'm here in Nottingham on my measly 2% average increase. Norwich doing a little bit better, Milton Keynes and Oxford obviously doing well. And then a slight fall since 2007, because that takes into account a 20% fall in house prices, but actually still not doing too badly year on year. So you can see, versus all these other cities, that house price growth is still comparably better than other areas. And that's because of the data that I've been presenting to you to date. but it's all about individual prices. So over the last few years, we have seen a bit of a fall in the east of England, certainly, and in areas like Cambridge. But I thought this was really interesting. I just like the fact it was called Pig Lane, actually, and I just thought I'm going to use that one. I just thought
there's a police station there as well.
Oh, is it? Well, don't tell me that. I'll completely forget the whole presentation.
Sorry.
That really made me laugh there. I said, that does look like a police house, though, actually, from the olden days. So anyway, getting totally distracted, sorry. So between 2018 and 20, most regional or average data will be showing falls, but you can see that the proper this 4-bed detached, lovely Pig Lane, was doing very well. You can see this 3-bed detached, probably not far away, I don't think, Maxine, don't know how many miles.
No, just round the corner, the Spinners tick.
So with this one, it hasn't had much of an increase, or any, definitely hasn't kept up with inflation, but it's held its value, and that's pretty important, because if you can do that with your properties during this time, you're doing pretty well. Now, I love this one because what it shows is, I imagine somebody bought that for 1.6, and I imagine it needed a lot of work doing to it. So even though prices might fall over the next year or so, do remember that one of the beauties of property, again, you're not cars and clothes. You can buy properties for a good price. If they've spent less than £1 million doing this up and have sold it on at a profit, then they've done extraordinarily well. And that's the trick to always making money from property. Price falls could actually be your best friend if you've got the cash to invest and you know how to add £1 million to a property, maybe just for spending £500,000. So I'd love to know the history behind that property. But that's a huge growth if you think about the falls that the national figures will have shown you. So individual prices matter. So the big thing I know you want to sort of talk about, and I've tried to leave time for questions, is what will happen next. And that's where we really are pie in the sky. But the property market, it's not going to open instantly because people have been furloughed. So a lot of agents, I think, are running at about 40% of capacity at this moment in time. And it'll take them a while to gear up. What I do think is going to happen is there's going to be 2 markets. So there are currently something like 373,000 homes that were offers have been accepted before we went into lockdown. The likelihood is and this is purely anecdotal, when I speak to couples, and what happens is who are in this situation, they go, somebody will come on, so Max, for example, and he'll say, well, Kate, he said, should I offer less? Should I offer less than they've accepted? And I'll say, well, you could kind of try it on. And then what I hear in the background, you can do that, but don't you dare lose me my property. And it's quite interesting because you imagine being shut up in a flat for the last 8 weeks, knowing that a month ago you were supposed to move into your next forever home with that beautiful garden. You're not going to want to jeopardize that purchase for the sake of a few tens of thousands of pounds even over the next few weeks. So we could well come back to a reasonably normal market, but some are going to try it on and some are going to probably get those prices reduced. So we will see probably August time, July, August time, some impact on house prices. But then there's going to be a whole bunch of new buyers and sellers coming in, and we don't know how they're going to behave. Will they care about property prices? Once you've been shut in a home for 8 weeks, you either love it and you're going to stay where you are, or you hate it and you're going to want to move somewhere else. And what I do always say to buyers and sellers is it's not about the price, because you can't control that. It's about the cost of putting that roof over your head. And at 0.1% base rate, that cost is not going to get any lower. And interestingly, Easter weekend, when rates started to come down, or the base rate was reduced, actually mortgage lenders were starting to increase their rates because they weren't making the margins they needed to. So unless something weird happens over the next few months, I do think we are at rock bottom prices. And if they don't buy that house at those rock bottom mortgage prices, then they're still going to have to rent, or they're still going to have to live with mum and dad, and that might cause disaster because they may all be absolutely fed up of each other by now. So we don't know how much buyers and sellers will want to bargain, but also I think sellers will come back in and think, do you know what, if I don't get the price I don't want, I'm not selling. Part of the reason for that is is remember over 50% of those sellers own their home and own it outright. And they don't have to sell if somebody's trying to do a deal at 10 or 20% left. They just don't have to. We didn't have that scenario 2007 to 2009. So for me, I think what will happen is in areas where property is still in short supply, there may well be no difference in price at all. And it all comes back to two buyers competing for one property. The price probably won't come up, but it won't, it's unlikely to stay the same. In areas hard hit by the recession, they may fall about 5 or 10%. And Savills have got probably the most useful report, I would say, on this. And I think they're probably around about right. Rents, we were hoping for quite a good increase in rents this year. I think some are still forecasting that, actually. I think, obviously, Maxine is 100 times better to know what's going to happen than I will. But I think they will probably stagnate this year. Maxine, I don't know if you kind of got it.
No, we've spoken about this before, because I was very much, you read the pundits and they're saying, oh no, rents are going to, they're going to increase. Given the economics, given the fact that, you don't know where people's jobs are, given the fact that a landlord is really happy to keep a good tenant in the property, there's actually not a particular driver to go, right, okay, let's get that increase. I mean, we've always said, yeah, we can get usually around about 4% increase a year. But I think really it's a case of looking at everything individually and then just saying, do you know what? You've got the good tenant there. They've been there through the hard times. They've worked with you. Let's keep it. So that's where I see it going.
Yeah, and I totally agree with that, because you know more about rents than I do anyway. So not a surprise, that chart that I put up last year, that chart that I put at the start of this is coming back again as my summary. The market is uncertain, but it will be. And even though it's Brexit before, even though it's COVID now, there will be something else come along at some point. These are the critical success factors, and I don't think now they will ever change. The only thing I would say, and I'm not doing this, I would always say this about Maxine, you heard Jane earlier, but I think because the next 6 to 12 months are going to be really quite tough for landlords from a legal perspective, I would not want to be letting myself. I actually always say I wouldn't want to do it because I've got a full-time job doing something else, even though I keep up with the best experts, and I'm lucky that my day job does that. If I've let before, I've let through an agent. I've worked with Maxine for many years, and her team as well, because they're a fantastic bunch of people who work with her, who also love working with her, and I think that's always a good sign of an agent. So for me, next 2 years, don't rent without a really good qualified agent. And I can't recommend Maxine enough, because she's not just a good agent, she actually really cares. And I think you need that as landlords over the next couple of years. Don't forget that in a couple of years' time, hopefully, if we can still get government to put it through, every agent will have to be qualified. So average tenancy is 4 years. So if you've got any of your properties with an unqualified agent that's not a member of ALA, not a member of RICS, just ditch them and move your properties to a qualified agent, because otherwise they're probably not likely to be here halfway through your tenancy. So I can't stress that enough. Maxine is not giving me a backhander as we speak to say that. Honest advice, because Maxine and my job is to look after you and make sure you're still here next year to talk to, or in 6 months' time even, goodness knows. So there you go. I hope I rattled through that quickly enough.
No, that's brilliant, Kate. That's absolutely brilliant. I suppose as a roundup then, as a landlord and someone who, basically I'm always looking for ways to expand my portfolio. Am I hearing then that I'm not going to get that huge drop I was expecting to go and munch up some special deal?
Let's put it this way. Let's go from the other side. So what if you were selling me a property? Do you wait a year or two to get 10 or 20% more?
Depends on my circumstance. As anything, it depends on my drive to sell. Exactly.
So the only way you'll get a deal is if somebody is forced to sell, or just once. You might have a landlord, for example, who hasn't been paid for the last 12 months because they didn't use a proper agent. They didn't get to the courts in time, and there's a lot of these around, and they may not get their property back till, well, probably won't get their property back till January next year. And those are people that were putting in requests in September that were expecting to go to court in April. So if you're one of those landlords, you might be happy to give 10 or 20%. But remember, the number of properties that you have got to do offers on, you've then got to look for a mortgage donor who's going to be kicked out of that property, or has to sell because of debt, for example, for some reason. Sadly, the other reason, so we always talk about 3Ds, which could force people to sell, and it's a horrible thing to say, and I please don't be offended, this is a reality, but the 3Ds are death, divorce and debt, and sadly coronavirus and the impact won't be kind on that. So some people will be forced to sell despite the kind of mortgage reason, perhaps debt less so. But I don't know that people will do a deal, because what happened in the last recession, and one of the reasons why rental percentages went from 12% up to 20, was because huge numbers of people between 2007 and 2009, and you will know the stats better than I, decided to rent the property out rather than be forced to sell. Is that not right?
Yeah, no, absolutely. And that's where we say the stagnation in rents, we saw it then, particularly in the outlying villages. So, that's, you sort of think, okay, that could, if anything, that could be the same thing.
Yeah. So so you might find a bargain or two, but it'll be more than a needle in a haystack. I don't know any phrase for more than a needle in a haystack.
Oh, hello, Wiz.
Oh, yes.
What it was really...
If I'm looking down every now and again, it's because my Dalmatian was by my side, and he's now decided to get up, have a little bit of a shake, and he probably wants a treat in a minute.
Excellent. Wiz, you get a treat. But what was really lovely to hear is you're saying sort of like housing authority tenants are actually quite a safe bet, because we do have a lot of landlords that start the conversation, don't want any benefits, and you sort of like, okay, why? Because there's been such bad press, and only the bad press reaches the press. And just to sort of like, in this situation, I mean, from the point of view, we've got 5% of our portfolio that have got an issue with rental, i.e. 95% of our portfolio that we look after, people are able to pay their rents. The people that haven't really been affected at all, as you say, is purely those people who are getting housing benefit because it got bumped up and the local authority bumped it up. And it is that driver to keep people in homes. So, if I could do anything, it's to stop this bad press on people that buy a home or rent a home and pay it through housing benefit. They're not all bad.
No, I mean, certainly before this happened, I would say that there was a potential bad deal just because there were so many issues with universal credit getting stopped and stopped again, and the local housing allowance was quite ungenerous in some. I imagine Cambridge was like the worst, where you could get much better money from renting for a professional, and why would you not do that? Because you're getting taxed a lot more than you used to be anyway. But local anybody on benefits has had £1,000 increase over the next 12 months on universal credit, and the local housing allowances have been increased. I'd still like to get a better deal. I'm still fighting for that, because I actually think the government, the deal as landlords you get is poor. And I think that government should be incentivizing people to make sure that a decent roof is put over local people on benefits, rather than them being forced to the road landlords in the market. Because that seems a ridiculous way of treating people. I almost think benefit tenants are mistreated by the government, and not given a fair deal. And as a result, as a landlord, you're not given a fair deal as well. But those have definitely changed over the last few months.
No, absolutely. One burning question that I should have asked you right from the beginning. So Sunday we had the announcement by the Prime Minister, and I've got to admit I was feeling a little bit Tuesday night, it's all went, oh my God, the market's opening tomorrow. Why did it change so quickly? Because we were banking on it's going to be the end of May, what Mark Hayward at Arla was saying. All of a sudden it was yesterday.
So there's several things going on there. I would like to say that as a lot of cross-industry work has been going on, because we knew that the market was going to be opening up at some stage, and we wanted to be prepared. And when in the home moving process, we go for, you've got lenders, you've got brokers, you've got legal companies, agents, you've got surveyors, you've got search companies, and you've got removal businesses. And what we wanted to do, what we thought was, wouldn't it be great if we could have guidance that worked for all of those people when it came to physical contact, be it your documents, be it ID, be it moving your belongings, for example, or doing viewings. So we have been working really hard for the last 3 weeks on developing guidance. We've also worked, for example, with kept in touch with the House Builders Federation, because they were creating new ways of working for the new build market. Now, when you saw Robert Jenrick's presentation on Wednesday, he really talked a lot about the new build sector, and they have pushed to open up the market, because economically it adds huge amounts of money. So for every pound invested in new build, you get about £2.83 back into the local economy. But also, they're one of those few businesses that can build and still maintain social distancing. Yeah. So I have to say, safety has come first in all this. It hasn't been and neither from government, I don't think, nor from the industry's perspective. Finance didn't come first in this. It was people's safety. Nobody wanted to go back to work, and nobody, because they didn't want to put anybody in jeopardy unless they felt it was safe. So we, House Builders Federation and the moving industries, worked on guidance. We shared that with government, and we too were expecting it to be a few weeks' time. Why did it happen so quickly? Well, one of the reasons is some rogue agents were already opening up, and other people were still doing moves. And it meant that the market was being left to some extent to rogues rather than the good people like yourself. So I don't know whether that was part of it, but I'm glad it's opened up sooner rather than later because of that. So it did happen very quickly, and I think the government has to be quite careful. I think it is if you're under circumstances of making announcements, if it affects shares and things like that. So we weren't expecting this. We were working on this guidance on Tuesday, chatting it all through, and we had no idea by 5 o'clock we were going to be told it was open the next day. So huge shock. But I'm really proud of the fact that when the government guidance for moving came out in the morning, because we'd worked so closely with them, and I have to say everybody had done a really good job, then the guidance that we'd created wasn't that different to the government guidance, so it needed a few tweaks. We'd worked also to make sure the consumer guidance is, so for landlords, tenants, and for buyers and sellers, we really made sure that the consumer guidance was ready as well, because people have to understand you can't move in the same way as you did before. So I strongly recommend people read that. I think you've got the information, Maxine, because
all 5,000 words of it.
Yes, absolutely. So doing viewings is going to be very different to anything you've seen before. Removal day is going to take longer. It may cost a little bit more, but we need consumers to play as big a part in keeping property professionals safe as themselves, as we're asking property professionals like yourself. So it did all happen very quickly, but I have to say I think we were pretty prepared for it. It will take, though, please be patient. Maxine, I'm sure you'd be grateful for me saying that. People have been furloughed, for example, and it will take a few weeks to get them back. So please don't ring up and say that you want to kind of move tomorrow and expect the agent to come around the next day. That's not going to happen. Be patient with the lenders, be patient with agents, surveyors, and legal companies. They're going to be under huge pressure for the next couple of months until this backlog of work has gone through and they've got their companies back up to speed.
Well, I'm going to counter you there, because we had a backlog of people that were due to move in from the 23rd of March. And I suppose it was about 2 weeks ago, thankfully, we sat down with our team of directors and went, okay, so what are we going to do? How are we going to handle this? Blah, 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 blah. Where's our lists? Got all our lists together. Yesterday, everybody hit the phones. So, okay, it's not tomorrow we're moving in, but the first one moves in on Monday. So we've actually been able to pick up the ball really quickly, purely because we were prepared for it. So, tick on that. to us. Well done.
Hey, if
so-
you want to unshare your screen, then you two can be on together, because at the moment it's just going between you two.
Oh, I did stop. Right, I'm just working out how to do that. That word stop
Okay.
share looks
There
like.
you go. I think everyone's back now.
There we go.
Oh, hello.
Oh,
Hi, Daisy.
sorry. Someone else wants to be on screen. Okay.
So
let's-
what
let's
I
do-
can't see now, Jane, is if anyone's had any questions at all.
Yeah, I've just got a few. Firstly, do you think the government's going to be kinder to landlords going forward because they know that housing is needed now, or is it just going to continue along another piece of legislation every month that we pretty much get at the moment?
Well, I hope I've kind of partly answered that. So definitely my view is that the 3-month eviction notice is going to continue. I think they'll just get rid of Section 21 very quickly, and then that eviction will continue. And again, that's why I stress it's so important to have a good agent like Maxine by your side, because the legals of asking somebody to leave your home when they're not paying rent are going to be terribly complicated, and it's going to be chaos over the next 6 months unless you're abiding by the rules. So you need somebody that is good at mediating and solving problems.
I guess getting those insurances sorted as well. I mean,
Yeah.
legal insurances, rent guarantee insurances.
Yeah, and getting that sorted. So the government's probably done its kindness in the increase in LHA rates and giving people on universal credit £1,000 bunts. The only other thing they might do is they might be forced to follow Scotland and offer rent loans to tenants. But interestingly, with Maxine saying 95% of people are paying their rent, I'm finding that individual landlords are getting hit far worse on rent payments than those that go with a quality agent. So I think that the fact you've gone with an agent, you're much more likely to get your money. So that's worth kind of considering. But I don't think they're going to be any more generous. And if you haven't been to see a tax consultant yet, go and see them, because somebody is going to have to pay for all of this. And I expect landlords, I'm afraid, will be on the list. So if you haven't got a tax consultant who helps you mitigate the tax, go and get one now. I think, Maxine, you have some.
You've got someone, haven't you, Max?
Yeah, Tony's fantastic.
Yeah.
So, she can help give advice. So you just have a chat and I'll put you in touch.
Yeah.
And just following on from that, what about ROPA, the regulations? Do you think that they are going to be put on hold, or do you think that now, certainly if what you're saying is right, that the government maybe got an inkling that rogue agents were doing moves, and I was hearing a lot of that, the rogues were not doing anything that the good agents were doing. Surely that's got to be something that they need to crack on with and make sure that the agents are qualified.
Being honest, they're 20 years late in doing it, because they really should have done it a lot earlier. It would have sorted out a lot of the problems that they're complaining about and trying to legislate for the moment. Actually, if you've got decent agents, hardly anybody gets evicted, for example. So they wouldn't have an eviction problem if everybody was working with a regulated agent, is my view. So we are going to have to push very hard. I will promise you one thing: I will do my own personal, when we're allowed out, placard outside of Westminster to say, will you get this regulation in? Because I am sick and tired of rogue agents giving everybody a bad name. But more than that, I'm sick and tired of rogue agents being allowed to treat tenants badly and misleading landlords that perhaps don't know better. So
we'll be there, won't we, Max? We all go.
I'll be there in your placard.
I love a good placard, honestly.
I will fight hard. I think that is more important than getting rid of Section 21, and I will absolutely bang the drum, and am banging the drum very loudly at every opportunity I can get.
Brilliant. Thank you, Kate. That's fabulous. The other thing was, you were talking about new builds, and obviously there's going to be a lot of building happening in the East Anglia area. Are you saying that you would buy, if you were an investor, you would buy a new build, or you'd buy the second-hand properties near the new builds? Is that like a,
Yeah, it depends on it depends on your localized area. So that is the kind of thing I go and have a chat on an individual basis to Maxine about, because she knows her area better, her area obviously better than I do. But my example is, so if you take central Cambridge, and they built all those amazing new flats, which were sold at quite exorbitant prices next to the station. When I was standing there looking at all of those, I just looked behind me and saw all these 2-bed terraces. And I can tell you now that this is just because I studied the whole country. So in Hackney, in London, which has had the highest house price increases annually every single year.
Wow.
The reason for that is because they have so few houses. Their flats have gone up in value, but nothing like the houses. The houses have tripled in value. And the reason for that is they're in such a short supply. So I just looked at Cambridge, saw all those people and thought, wow, that's going to bring loads of people into central Cambridge. And the next place that those people are all going to want to live is those lovely little 2-bed terraces, which are now, I think, going for similar prices to, not that far off, to ones that you would have seen in Hackney. So it's all about that supply and demand of that individual property on the street. So in some cases, new build can be a better bet. Financially. So for example, in my village, actually they're 30% cheaper than my 200-year-old farmhouse. And that might be better from a tenant perspective, and that might be better from a
But then I guess you've got all your service charges and things that sometimes when you're buying a new build, you don't know until you know. Yes,
although most of the houses on the new build estates, for example, so there's a lot of work going on leasehold. You cannot sell a house. It's very rare you can sell a new build house now with leasehold, which was a bit of a scam in some cases.
Yeah.
Sometimes it isn't, but it was a scam before, but that lenders won't back that. So most of the houses are freehold. And there are some beautiful places being built. I know we chatted about this last time, Maxine, because over in Alconbury, there was one of the most fantastic new build sites that I'd seen, and that had schools and community shops, loads of beautiful open spaces, and the properties weren't being built on top of each other. And I thought that would be a really interesting place to study.
That's unusual for developers, though, isn't it? Normally they want
very much. Yeah, they just want to shove everything in little boxes.
No, they just don't do that as much. There are still cases of it, and don't forget, the density as built is not dictated by the developer, it is dictated by your local authority. Don't blame the developer for something that's not their fault. There we go. I'll tell them off when they do something wrong, as I would agents, but in this case, they're blamed for, I know. I'm not too scared to come after you, Maxine, but I know I'll never have to.
Thank God we're okay.
That's all the questions. David Monk has now said that you're going to be the government minister in charge of lettings, Maxine.
Oh,
so that's good. So we can all be lobbying outside you in the House of Parliament.
I'll go with my placard.
Maxine does attend the Lettings Industry Council meeting, which is normally 3 times a year. I think we have that.
Yeah.
HCLG are present. That is all about looking after landlords and tenants. So Maxine is at least there as a voice on your behalf and invests her time doing that.
So there you go, David.
So there you go.
Brilliant. So, any other questions? I can't see any others. Let me just double check. But I think that's all.
That's why I know what you lot are like down south.
She's north.
I'm up.
Where are you?
A1, off to the right.
Up the A1 and off to the right?
Yeah, so near at Grantham Way, that's where.
Oh, okay, cool. And I'm on the M25, so pretty much, literally. Cool, okay, well, that's all the questions, so.
Well, I'd like to thank you so much, Kate, for giving us your time, because, I know you've been super busy over what's been going on. And yesterday must have been a very interesting day for you. So thank you so much for spending the time. Thank you so much for giving that fabulous information, because I think any information is great when you're
Please make sure everybody that you follow Kate's Facebook and website. So we'll make sure that that's all in the link underneath, so you can.
Yeah, and everybody's welcome to the slides. By the way, they're not secret. So if you want a copy, you're very welcome to those.
fabulous. We'll definitely put some of the stats out as well on the social for everybody else to watch. So brilliant, thank you. Lovely to
And
see
thank you, Jane, for the text.
Well, you know, it's never good, but you know, I do my best. It's just
it works. That's the main thing.
Yeah, we don't have to. If I don't have to worry about it, then we're all in good hands.
All right.
time
Well,
to take
thanks a
the
lot,
out
then.
now, I think so.
All right then. Thank you.
Bye.
Bye bye.